The extraction of critical transition minerals is structurally bound to fossil fuel markets. Industrial blasting agents rely on low-density ammonium nitrate, which requires ammonia synthesized from natural gas. This thermodynamic link exposes the entire mining sector to severe energy market volatility. During the 2022 energy crisis, European natural gas prices peaked at an annual average of $40.30 per million British thermal units. This surge drove Baltic ammonium nitrate spot prices to a record high of $680 per metric ton. This represents a 223.8% increase relative to 2020 baselines. Although natural gas prices stabilized to an average of $11.50 in 2024, structural risk premiums remained. Ammonium nitrate prices settled at $340 per metric ton. This represents a permanent 61.9% elevation above pre-crisis levels, locking in higher baseline extraction costs. The global supply of mining-grade ammonium nitrate is highly concentrated in geopolitically sensitive regions. The Russian Federation maintains a structural hegemony over global exports, controlling 38.2% of the seaborne market as of 2023. This concentration exposes Western mining operations to severe geopolitical choke point risks. Simultaneously, China's export share collapsed from 9.5% in 2021 to 3.1% in 2023. This decline reflects strict state-mandated export quotas designed to prioritize domestic agricultural security. These quotas effectively restrict the global supply of energy-intensive chemical precursors, with Russia, China, and Egypt controlling over 51% of global exports. Supply chains are structurally fragile. Mining operators are forced to secure long-haul logistics, which increases transit times and heightens exposure to maritime shipping disruptions. This geographic rigidity prevents rapid supply diversification when regional production halts occur. Upstream chemical deficits translate directly into higher operational costs at the mine face. In Latin American copper mines, blasting costs per ton of run-of-mine ore surged by 117.7% between 2020 and 2022. This escalation was driven by a heavy reliance on imported ammonium nitrate and high-cost emulsion precursors. A similar trend occurred in North American nickel operations, where deep open-pit configurations require high stripping ratios. Blasting costs there escalated to $1.12 per ton in 2022 and remained elevated at $0.89 in 2024. These persistent costs directly threaten the economics of low-grade mineral extraction. This chemical bottleneck is compounded by declining ore grades worldwide. As near-surface deposits deplete, mining operations must move more waste rock per unit of refined metal. This rising stripping ratio increases the physical volume of blasting agents required, amplifying the impact of the chemical deficit on the global energy transition.